Hello, hello, hello. Welcome back to the show. Hope you're having a wonderful day today. All right, so we got 246.55. We this have to be careful what words I say because YouTube is blocking certain words. So I'm going to say this crisis is starting to hit. Starting to hit. I excuse me. I have a change in my investment strategy. Personal financial regulators, they say that we are in a recession. A recession is defined as two straight quarters of negative GDP. I don't think we've had two straight quarters of negative GDP. Think this quarter, a quarter is 3 months, so 4 quarters in a year. This quarter is coming to an end this week when the numbers come out. When the numbers come out, the numbers are going to come out later on in April. But I think you'll see a negative growth rate in this quarter. But a recession is defined as 2 quarters of negative growth and a 20% decline in the markets. I'm going to go to a site called barchart.com, and so far in the and this is the S&P 500. S&P 500 is the S&P, and S&P is Standard & Poor's. Standard & Poor's is a credit rating agency that rates the credit worthiness of businesses, such as your big businesses, AT&T, Verizon, such so forth and so forth. 500 is the 500 largest companies. 500 largest companies in America. So Johnson & Johnson, GM, Ford, Microsoft. Wait, is Microsoft S&P or is they? Oh, you understand what I'm saying? I think Microsoft is in another index, but these are the points in the S&P 500. I'll do a separate video describing that, but the point I'm trying to get at is the S&P was at 3,391. It wicked. Remember that wick is this little candle wicking right there down to about 2,200. It's at 2,541. It's red right there. It's about a 40, not 40, but more than 30% decline. So if we go to here, we type in recession, it'll give a proper definition. In economics, a recession, I don't think this is going to, is a business cycle contraction where there is a general decline in economic activity. Obviously, with this crisis going on, no one's going to work. There's no trend. A lot of the transactions that are being made, American transaction can be anything. Going to the grocery store, buying goods and services. A lot of the economic, lost words. Every time I turn on the microphone, I lose my words. All of the economic activity in America is slowed down because people are not going to work. They're or working from home. A lot of layoffs are occurring. Over 3 million people filed for unemployment. So a lot of the economic activity is slowing down, which means there's a contraction. Recessions generally occur when there's a widespread drop in spending. Obviously, what's going on now? And also there's a 20% decline in the market. So the S&P 500 is you can say this is a glance at the totality of the market. It's 30% decline. Dow Jones Industrial Average is the same thing. Actually, let's look at the Dow Jones. I tried to go in this show being more structured, but as I get going, it's pretty much gets unstructured. So this is the max. So let's see here. Is this it? Yeah, Dow. This little down right here. This is the 2000, say June 2000 at the bottom. That's the dot-com bubble. That was pretty large. But this right here, as you can see, this little dip, this was the housing slash financial crash of 2008, 2009. And you can see it rolled back up. And this right here, this little gap down right here, this is the current crisis. So as you can see in the past, it has done the same things. Right here, this is in the early 90s. I'm pretty sure if I go back out, you'll see the Black Monday. Oh, I forgot this is sensitive. 87, which is stops. But all right, so this is a more close-up view. This is the Dow Jones. Um, the changing that I'm doing is I'm going to still put money on I'll say Coinbase, Robinhood, but I'm not going to be doing any investing. The reason I'm not going to buy any stocks, I'm going to have money. I'm going to be sitting in cash. The reason I'm not going to be purchasing stocks is because I'm not an expert in technical analysis, but the people I follow and that teaches me technical analysis, signs show that this market could go down more. Last week when I did the show, my portfolio was being bolstered by Bitcoin. Bitcoin is going down a little further. Bitcoin is not disappearing. It's just Bitcoin is pegged to the dollar and it's going down like stocks are going down. I'm not going to sell because I don't want to do that. I don't want to send that signal to you all that's paying attention to what I'm doing. I'm not going to say I'm going to stay in my positions, which are 2 Coca-Colas, 3 Tesla. Well, not wish I had 3 Teslas in this portfolio right here. 3 what's this, AT&T and 1 Verizon, and I have this much of Bitcoin, not a full Bitcoin, not a few Satoshis, but this much in Bitcoin. I'm going to keep these, but yeah, this market is going to go down a little more. Depression. People are calling for. Allow me to rephrase my words there. Excuse me. People are saying that we could, well, might, not official, not written in stone. I want to get that point across. Not written in stone. Might go into a depression. Now, depression is defined as no one living has ever been to a depression. Last depression was from 1929 to 1933. So there could be some people that were alive, but they were babies, but actually was like of age and was going through it and felt it. No, very little to no one is alive. So a depression. What is depression? So a depression, I believe, without looking it up, is defined as a year long of negative growth and a 70% decline in the market. So to put that into perspective, let's go back to the S&P. I think I just should go push the back button here. All right, so go back to the S&P. All right, let me move this up. So we can go back to between the highs of 2007 before the housing slash financial crisis of 2007, between the highs and the lows of 2007 of the last market crash, which is right here in this area right there. So it could go from here up, way up here to down here. That would be a massive decline. So let me look up depression. Wrong letter. Depression definition. No, let's say economic depression. definition. There we go. Let's see here. Okay. So in economics, a depression is a sustained long-term downturn in economic activity in one or more economies. It is a more severe economic downturn than a recession, which is a okay. So that specifically, it's not popping up as specifically say it is categorized as this, but I believe it's a year-long negative growth rate. There's no growth. So growth is in America is around what 2 to 5% per year, but it's zero negative growth rate. There's a lot of contracting in the economy, and I believe actually, you know what? I know who have it. Investopedia. You know what? I think I'm going to do this show as more of a conversation instead of uh, high level video editing type deal. So let's look up so you all can see how I come up and get this information. Let's look up depression because I think people would are more susceptible to more not susceptible but more can soak in the information when it feels like someone is talking to them. So there we go. I click on it. So depression. So a depression is a severe and prolonged downturn in economic activity. In economics, a depression is commonly defined as an extreme recession that lasts 3 or more years or leads to a decline in real gross domestic product or GDP of at least 10%. Okay, so there we go. And I believe there's a percentage drop that's associated that's in the definition of a depression. Oh, this is good information right here. So a recession is a normal part of the business cycle that generally occurs when GDP contracts for at least 2 quarters. That's what I said previously. A depression, on the other hand, is an extreme fall in economic activity that lasts for years rather than just several quarters. This makes recessions much more common. Since 1854, there have been 33 recessions and just one depression. So this economic downturn is not nothing new. Since 1854, there have been 33 recessions and one depression, and the last depression was the Great Depression from 1929 to 1933. And even after it was, let's say it technically ended, the economy didn't just pick back up and say, okay, we're good. It took a while to swing back up. Just right here. See, during this last recession, it dropped. And it took years to get back to the previous highs. So this was 2007. The bottom was in 2009. It took what was this June? It took what about a year? I say a year and what couple months to get to the bottom. So June. Wait a minute. So March 2009 to here, which is say about here to the next highs. It took 4 years. So it's gonna the market. Let's say if remember it's not written in stone. The pressure not written in stone. If it comes down here, it's gonna take time to get back to the previous highs. And in that, it's a lot of opportunity for investing. It's a lot of opportunity. A lot of people made fortunes when they bought down here and rode it all the way up. Same as way, there's books written of people who have been made that have made fortunes during the Great Depression. You know, fortunes. Family sets, dynastic families created. You understand what I'm saying? And right here was this. So this was the Great Recession. Right here was the what's that? Uh, oh man, these words are escaping my mind here. the .com bubble. This when I graduated high school. Well, a lot of people that listen to this, nah, I went to high school with, but this when I graduated high school. I didn't know what's going. I did not know what was going on at this time. I didn't, you know, .com bubble. What's that? You know. But then when this happened, I started to get more and more in tune what's going on. Opened up my first brokerage account on E-Trade. Still didn't know what was going on, but from here to here, acquired knowledge, and now I understand what was talked about but flew over my head here, and what I was trying to grasp here. I understand here, and I won't let none of this opportunity pass me by. But let's get to a few news articles before I break down what I'm changing more. So this just came over the news wires. Let me refresh this, see how long ago it was. I think it maybe 3 hours ago. Yeah, 3 hours ago. German state minister kills himself as, I can't say that word because YouTube, hits economy. So let's see how long this article is. Al Jazeera articles are not too long. Thomas Schaefer, the finance minister of Germany's Hesse state, has committed suicide apparently after becoming deeply worried over how to cope with the economic fallout from this. State Premier Volker Bouffier, Bouffier said on Sunday. Schaefer, 54, was found dead near a railway track on Saturday. The Wiesbaden prosecution's office said they believe he died by suicide. So apparently, Germany's state minister of finance, I believe, killed himself. Yep, here we go. Thomas Schaefer, finance minister of Germany, killed himself because of the worries of what's going to happen economically, not only to Germany but to the world, because we're living in a more connected world. We trade with one another. We depend on other countries. Uh, Due to this, what's going on now, he was worried and he killed himself. This is, it's like, wow, like, what does he know? No, either what does he think or how bad this can get? You understand? And I'm not here to do fear porn or nothing like that. It's better to understand what could happen and prepare. It's extremely worse not to have these type of conversations, because now you just out there. You just, oh well, whatever. You can't live like that. It's highly idiotic to live and say, oh, what comes comes. That's not an option. That's not an option. It reminds you, I was in the military, and they'll tell you that is dumb. That is highly stupid to say, oh well, no, it'll whatever's whatever. No. What's the situation? How can we make the best of the situation? And this is the purpose of the video. So we're having this conversation. Period. Point blank. Period. So Trump signs historic $2 trillion stimulus after Congress passes it Friday. So during the last, I don't know if you all remember who I was old enough. During the financial crisis, the housing bubble, let's say that, .com bubble, housing bubble, to simplify things. During the housing bubble, George, is it W. Bush? H, I think it's W. Bush. Yeah, W. He signed a bill. What's the name of that bill? Because I remember it. Can't remember the name of it. Where the Fed was going to bail out the banks and yeah, bail out the banks. $700 billion. If you're not familiar with money, million, billion, trillion. So, how big is $2 trillion? 1 trillion is 1,000 billion. So $1,000 billion equals 1 trillion. And obviously, with that, you know, comes 2 trillion, which is 2,000 billion. 1 trillion is $1 million. 2 trillion is $2 million. This is a lot of money. And obviously, there's a lot of, I'm not here to read to you all what's in the stimulus package, but obviously people are going to get money. Okay, that's fine. People are going to receive funds, but this is a lot of money. This is $2 million or $2,000 billion. Just to try to put it in perspective. Um, Another way to put it in perspective is, how long ago was 10 seconds? Well, how long ago was 10 minutes? It was like 200 and, nah, like it was like 2,000 seconds ago, right? How long ago was I forgot how, it's a way to help put this in perspective. How long ago was, no, how long ago was, you know what, I butchered it, forget it. I didn't butcher it, but it's a way to help you understand how large these numbers, these sums of numbers are. A trillion seconds ago, seconds was I want to say 37,000 years ago. Yeah, it's I would calculate it, but to be honest, this calculator don't hold them many zeros, and that's how large this number is. This calculator do not hold them many zeros. It's what, 12 zeros? Yeah, yeah, 12 zeros. That's how this calculator don't hold that many zeros. And put a 2 in front of them 12 zeros. So I'm glad that they're helping people uh, relieve some stress and debt. But on the other side of that talk, I'm not saying not they shouldn't have done it. I'm just saying this is a lot of money, and we'll see. But my new strategy, like I mentioned in the beginning of the show, is I'm not purchasing any more stock or crypto. I am gonna sit in cash because I think this market is gonna go down more. One of the stocks that I'm going to purchase is ExxonMobil, XO, ticker symbol XOM. We look at XOM, well, ExxonMobil, you all know what I'm talking about. This thing has gone down past, actually this is, where's 2007? So this is the lows of the last market right here around this area. Market doing what do I call it? The housing crash. Well, right here. This thing has gone down past that. We're talking about it has gone down past the dot-com bubble too, and it still has ways to go. But ExxonMobil, company-wise, is well, if you look at the fundamentals, where we at? Fundamental. Where was that? Financials. I should have clicked on balance sheet. We look at everything. ExxonMobil is on paper, a reputable company. I think I'm gonna go through this on another time. It's a reputable company, and they pay a nice dividend. I think it's 89 cent. Yeah, 89 cent because Chevron pays $1.29. I've pointed out, look, the recovery part of this painful decline is nice. And this thing goes down more and more and more. You can pick this thing up for a few dollars. It pays a nice dividend and it goes up. Oh, not only does your net worth go up, but you have potentially purchased, and it's not just ExxonMobil, it's all stocks. It's not just ExxonMobil, but you have potentially increased your net worth. You have turned a crisis into an opportunity. That's the definition. That's what I'm trying to push into you all head. Use this crisis as an opportunity. And yes, this is going to be one hell of a crisis. I understand. Please don't get me wrong. I understand this is one hell of a crisis. It's going to be bad. but don't let it be 100% bad. That's what I'm trying to push through you all's head. Don't allow it to be 100% bad. Please don't. Um, because there could be a whole lot of whole lot of opportunity in this crisis. So I wanted to say that I'm going to be sitting in cash. I'm still going to be putting money on Robinhood. Robinhood has been acting up. I'm going to give them a second shot, but I'm going to have money. I'm going to be sitting in cash on Robinhood. I'm not going to be investing any more stocks or had a burp. Excuse me. Got a burp. Drink some lemon water. You know how it is. Excuse me. I'm not going to purchase any more stocks or crypto. I'm going to be sitting in cash. So when man, that lemon water get you, boy. So when things go down more, and I speak to my technical analyst friends, I'm going to be spending some money. Yeah. So I hope you all enjoyed the show. Hope you all enjoyed the talk. Let me know what you all think down below in the show note. Well, in the comment section. Let me know how I can improve this. And yeah, I hope you all stay safe. Please abide by the rules. Clean the surfaces, wash your hands, stay in the house, please. Stay home because this is not just the flu. Don't, no, I'm not going to get into that. I'm going to keep this strictly fine. Good. Oh, I'm like, wait a minute, it just went down to 226. I'd have completely forgot I'd have put the thing right there. Let me get off here, man. Let me get off here. So don't forget to like, comment, subscribe. Hope you all enjoy the rest of your day, and I will catch you all. I'll catch you guys on the next one. Peace. Peace.